area to watch out for. But let's come back to commodities, and of course China is a big one when it comes to that. Naveen Mathur now joins us on the show with his strategies on that space. Naveen, hi. China really seems to be on everybody's mind. Even as we've had Brexit come and go, it really is China that is telling us where the markets could go. The stimulus expectations, and that had been taken, the metal price is higher, but that really seems to be easing right now.
Yeah, that's right, Manisha. I think what you rightly pointed out, that China has some concerns. We are seeing these concerns hovering on the global economy for the last 2 or 3 years. I think they're largely related to debt. Although they're taking all the measures, the central bank there is taking all the measures to ensure that there is enough liquidity, there is enough positive sentiments being built around by the bank on the monetary policies, but still there are concerns definitely. And just because of the weaker dollar, we did saw the prices moving up for the base metals or the precious metal or entire dollar-denominated commodities. But I think overall the trend for the base metal pack as of now remains slightly range-bound, Manisha. Maybe a little bit of the bearishness for the base metals pack. So the copper strategy for the intraday would be to sell along with the trend on the MCX for the August contract at around 320, 321 levels, stop loss at around 324, and we're expecting targets on the downside at around 314 to 315 levels.
Naveen, how are you looking at the precious metal space, especially gold, because the latest reports from ABN AMRO, UBS as well, talking about 1400 plus kind of levels in gold in this quarter itself. Are you that bullish?
Manisha, I don't deny that fact. The gold prices has of late taken an upward trajectory. They have moved up by around $100, if I'm not wrong, from 1250, 1240 levels we have seen before the Brexit referendum. We are seeing prices hovering around $13, $50, $60 levels. So I think overall the markets, because of this uncertainty, because of the weakness in the dollar and the Fed policy of a gradual increment, maybe no increment in the Fed rate for this year, but I think today's unemployment data and the non-farm payroll data would be crucial to look out for the guidance in July FOMC meeting. So I think overall trend still remains positive. We would go buy at around 31,750 to 800 levels for gold. 32,200 would be the targets, and because the markets are very volatile, I would always recommend the clients to put the stop loss at around 31,550 levels or so.
Sure. Volatile really seems to be getting synonymous with crude oil prices, with the kind of moves we are seeing there. So what's your sense and how are you trading that one today?
Manisha, that too, I think is somehow being consolidating at around $50 levels. The Brent crude and the WTI is hovering around $48, $49 levels. I think $46 or $47 levels is what the crude is right now on the Brent side. I think we will go for a sell because there is continued economy pressure, the China factor, which we spoke about some time back, plus the Federal Reserve, the economy concerns in the Eurozone would pull out the pressure from the upside, but on the downside trend. So I think the sell recommended strategy would do good for the MCX July contract. Sell it at around 3100, stop loss at around 3150, and targets on the downside in a range of around 2,950 to 3,000 levels.
Okay, fair enough, Manisha, as well as Naveen. Thanks very much for joining in and giving us all of those details in terms of what's taking place in the commodity and the currency space. For the equity markets, profit booking is what we are seeing for the Sensex, down around 100 points as we speak.